Howdy, everybody. Welcome to the Liberty Call. Today is Wednesday, June 4th, 2025. Hope you're having a fantastical day out there in the interwebs. It's kind of a day here in Colorado. It was cold and rainy this morning, and apologize for that. It was cold and rainy this morning, and today the sun's trying to peek out, but it is a bit chilly. I got long sleeves on and pants. So, anyways, so it's not like it was a couple days ago. All right. Well, back to the markets. Tech stocks carried the markets higher today, even as weak job growth rekindled talk of Fed rate cuts. ADP posted the softest hiring number since 2023, prompting Trump to publicly nudge Powell to slash rates. Meanwhile, Hewlett Packard and Global Foundries impressed with Tesla and CrowdStrike, while Tesla and CrowdStrike stumbled. Oil and gas slipped, and Bitcoin hovered just above 105,000. Looks like the quote soft landing debate just got a little louder. So before we break all the news down today, I need some help from you. Yes, you. We got to share the knowledge that I'm spreading out here. Give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. All righty, let's get into the markets for today. So domestically, Dow Jones was down 0.22%, 91 points, closed at 42,427. The S&P 500 was flat at zero. It was only up 0.2 points total and closed at 59.70. NASDAQ up 0.32%, 61 points, closed at 19,460. The VIX was down 0.45% today. It's at 1761. Canada down 0.37. Brazil down 0.45. And Mexico down 0.38. Jumping over to Europe, Germany up 0.71. The UK up 0.16. France up 0.53. Netherlands up 0.4. Spain down 0.19. Italy up 0.02. Switzerland up 0.54. And Portugal down 0.49. Russian exchange is both green again today. The MOEX up a tenth and the RTSI up 0.55. And the overnight markets, the Nikkei in Japan was up 0.8. Australia up 0.89. New Zealand up 1.04%. In China, the Shanghai was up 0.42. Shenzhen Component up 0.87. China A50 up 0.11. DJ Shanghai up 0.43. Hang Seng up 0.6. And the Taiwan weighted when it closed on the 3rd was up 0.59. Good stuff. Good stuff. So, domestic markets were kind of meh. Your blue chips were in the red, the S&P was flat, and the NASDAQ was in the green. So, again, it probably will go the other way tomorrow. All righty, let's get to the market recap. S&P 500 edges higher, but weaker labor data keeps gains in check. All right, the S&P 500 edged higher Wednesday, well, barely, as disappointing labor market data and renewed U.S.-China trade tensions added uncertainty to the economic outlook. U.S. private payrolls increased by just 37,000 in May, falling far short of expectations and stoking fears of a slowing economy. Remember yesterday where they were talking about everything was great and fine? From day to day, this changes. It's crazy. This followed a downwardly revised 60,000 job gain in April. In response, Donald Trump lashed out at Fed Chair Jerome Powell on Truth Social, calling for immediate rate cuts to combat the economic deceleration. Well, if I could pause here, the Donald is not an economist or, he's evidently good at what he does with land deals and things like that. But, the economy, let's back off. Lowering rates will spike or heat inflation back up and cause bigger problems down the road, again, like we're dealing with right now. So, again, Mr. Trump is, it'll look good on his ledger, but then somebody else behind him is going to have to deal with the problems of whether or not it's JD or, Marco or whoever on the conservative side or, AOC or whoever on the left. I don't know who they're going to pick next. All right, getting back in. Meanwhile, trade tensions remained elevated with the deadline for U.S. trading partners to submit their, quote, best offer to avoid Trump's proposed tariff hikes. Ending Wednesday, only the U.K. reached a preliminary agreement. A call between President Trump and Chinese President Xi Jinping is expected later this week, offering a potential de-escalation opportunity, though Trump called Xi, quote, very tough, end quote, and, quote, extremely hard to make a deal with, end quote, earlier in the day. Trump followed through on a prior threat by signing a proclamation doubling steel and aluminum tariffs to 50%. In corporate news, CrowdStrike stock dropped after issuing soft revenue guidance despite beating earnings expectations. Dollar Tree also declined without holding a full declined after withholding a full year outlook boost, uh, diverging from rival Dollar General. Tesla fell over 3% on weaker May sales data and further declines in Europe. Asana dropped on weak guidance, while Hewlett Packard Enterprise gained thanks to strong AI server and cloud demand. Overall, markets were cautiously optimistic ahead of the Trump Xi call, though underlying economic and trade concerns linger. Friday's official job report will be closely watched for further clarity. Is what it is. All righty. Well, let's get to a data report here from First Trust. It's the May ISM Manufacturing Index. This was put together by Nate Gersey. So let's see what my summary of this. U.S. manufacturing activity continued to contract in May, with the ISM Manufacturing Index slipping to 48.5 from 48.7, its lowest reading in 6 months and below expectations. Despite the decline, core components of the report showed some improvement, making the drop somewhat puzzling. The overall decline was driven entirely by a sharp fall in the inventories index, likely reflecting a correction after companies stockpiled ahead of impending tariffs. Production rose slightly from 45.4 to 40 Production rose slightly to 45.4 from 44. Whew, that's a mouthful. But that still marks one of the weakest showings since the pandemic. New orders remain weak, and ongoing tariff uncertainty combined with federal spending cuts is prompting firms to scale back production and hiring. The employment index stayed firmly in contraction territory, with 9 industries reporting job losses compared to only 4 reporting gains. Supply chain disruptions are again surfacing, with one industry group noting that current issues from tariffs rival those experienced during COVID. The supplier deliveries index jumped to 56.1, its highest in nearly 3 years, though still well below the worst pandemic era levels. Inflation remains a key concern. The prices index dropped slightly to 69.4, but aside from April, that is the highest reading since 2022, highlighting persistent inflationary pressures despite declining activity. Separately, construction spending dropped to 0.5% in April, driven by declines in residential, manufacturing, and power-related projects. Overall, the data suggests a sluggish manufacturing environment burdened by tariffs, weak demand, and inflation, and not a great signal for broader economic momentum. Well, I've been saying things are going to slow down at some point when the juice ran out of the out of the tank, and I think we're getting there sooner than later. All right, one last article here for you Bitcoin people. Bitcoin becomes safe collateral. JPMorgan to offer loans financed with crypto assets. This comes via Zero Hedge. So let's see what this has to say. Less than 8 years ago, JPMorgan CEO Jamie Dimon threatened to fire employees caught trading Bitcoin, calling it fraud. Now, with Bitcoin trading above 100,000 compared to just 4,000 back then, JPMorgan is reversing course in a major way. According to Bloomberg, the bank will soon allow wealth management and trading clients to use cryptocurrency-linked assets, including BlackRock's iShares Bitcoin Trust, IBIT, as collateral for loans. This move positions JPMorgan as the forefront of mainstream crypto finance, just as regulatory barriers begin to lift under the Trump administration. In addition, JPMorgan will now factor clients' crypto holdings into their net worth calculations, placing digital assets alongside traditional ones like stocks, cars, and art. This change allows crypto investors to tap liquidity without selling their assets, potentially breaking the cycle of forced liquidations during market downturns. Despite Dimon's continued public skepticism, recently likening supporting Bitcoin to defending someone's right to smoke, his bank is rapidly expanding into the space. JPMorgan was one of the first major institutions to embrace blockchain and has long provided banking services to crypto exchanges like Coinbase. This policy shift follows the explosive growth of spot Bitcoin ETFs, which debuted in early 2024 and now oversee more than $128 billion. The market responded enthusiastically to the news, with Bitcoin and Ether prices climbing. JPMorgan is also reportedly exploring structured investment vehicles that could offer institutional investors fixed returns backed by Bitcoin, reviving strategies from the 2020 and 2021 crypto bull run. Meanwhile, rivals like Morgan Stanley are also planning crypto integrations, signaling an industry-wide evolution. Well, that's interesting. So It is definitely, I guess in the eyes of the banks and the regulators, more of a, I don't know if they call it a safer asset, but something they're at least willing to deal with and put on their books. So, I mean, that's a positive sign, I think. So, I mean, I'm a fan of crypto. I mean, it's not the be all end all. I mean, you got to have your, uh, you know, diversify all of your assets, whether or not it's stocks, bonds, cash, crypto, gold, silver, hard metals, metals on paper. So, having diversification is important, and so that when things do go wrong, you're not standing there holding everything in one bag. So, all righty, well, that's everything that I had to cover for today. So, if anyone needs to get in touch with this guy, where do you want to go? DSA or your financial planning needs can be addressed there. So give me a call. I would be glad to help. All righty. Well, hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.